All right. Well, thank you everyone for joining this panel. Thank you for joining Convergence. It's also our flagship conference at OpenZeppelin. Yeah, very happy to receive the three of you. I'll start maybe with a short introduction. I did our financial institution team at OpenZeppelin, and my goal on daily basis for financial institutions secure their products moving on chain. It includes companies like DTCC, WisdomTree, and we really work at a global level, also with APAC and Europe as well. But we've seen a lot of movement, obviously, recently in the US. I think that's something maybe we will touch on. So yeah, I'll start with introducing our three panelists, and it's a very privilege to get you on board today. So for us today, the conversation is really about like institutional adoption, and we want to explore if really this year was the main turning point, right, into what's going to come next. We've seen institutional are not today really asking if they should build on chain, but like how. And that's really like a turning point we've seen this year. Regulatory also improved this year in Europe, in the US as well. And recently I've seen some charts around like market cap in stablecoins, and we've hit in October $300 billion, which is huge. So today, to structure this conversation, we'll go through like three main areas: what really changed in 2025, and why institutions really are accelerating now. What is still missing, I would say, as well, in terms of like regulatory environment, technical gaps, and standard gaps. I think we have the right audience to touch on these three pillars today. And when real scale happens, is this inflection point the year we've seen today, or we still have a long way to go? Some people would say like 5 years, 10 years. I'll be curious also to have your view there. So first, we have Anthony, who is actually Director of Ecosystem Growth at Circle. And Anthony brings really more than 20 years of experience in like across AI, engineering, product innovation. And today he leads ecosystem growth for USDC at Circle. And you've been working directly with like developers, enterprises, and fintechs. So I think your review will be pretty interesting for this conversation. Next, we have Ash Nathan from Chainlink Labs. I think you're driving like strategic initiatives across interoperability, institutional compliance, and Chainlink CRE. You'll explain more later, but it's Chainlink for runtime environment. And finally, we are also joined by Tomer Veller as well, Chief Product Officer at the Stellar Foundation. And you oversee this product strategy at Stellar, and you've been spending actually years building this new Rail environment for like Vault payments and also tokenization and cross-border values. So thank you for joining me today for this conversation. But maybe for the audience today, we want to learn a bit more about what are the projects you're currently working on and how it will really help us move into this conversation. So maybe Anthony, if you want to kick us in with a small intro.
Yeah, happy to be here on this great panel. My name is Anthony. I'm the head of ecosystem growth at Circle. I would say that some of my perspective just on this panel is more from the perspective of a builder. I spent my whole entire career building software ranging from situational awareness systems for soldiers at war to real-time video, real-time animation, all the way through agentic workflows and agentic commerce on chain. And I say that all to say, you know, I've worked as a founder, I've worked as a CTO. I say that all to say I bring the builder empathy to my work every single day. And that's what I do at Circle. I work with developers, whether you are a startup founder or an engineer at an institution. And my goal and my team's goal is to reduce the friction of adoption of our technologies, USDC, Circle Developer Platform, and also ARC. And, you know, we're going to talk a lot about regulation and things like that, but from my perspective, I think the next kind of frontier is really reducing the friction of the developer experience so we can achieve a mass adoption around institutions. So that's my perspective on. We'll go deeper in that.
Cool, thank you. Ash, maybe you want to go next?
Yeah, so I'm Ash. I'm part of the strategic initiatives teams. Basically, what this team does is we work on the new products that Chainlink is bringing to market. So little background on Chainlink. So Chainlink has been focused on helping developers from a very early stage. The main focus has been to provide infrastructure to enable new use cases. And most of these use cases are value securing use cases. So in the early days of DeFi, you probably had, I don't know, like 5, 10 teams in the space. And now you have hundreds. And what has enabled this to happen is secure infrastructure that and lets use cases like borrowing and lending markets to exist and operate well. And so today, like 5 years after the creation of DeFi, we've been focused on an infrastructure that now we are providing as a single runtime SDK and CLI for developers to come and natively connect off-chain systems and on-chain systems without having to go through us. So basically, like, it's Chainlink out of the box. And so, yeah, this is a big focus for us. This is something that institutions really care about, because what they want is they want to be able to connect their existing systems. They want to, not just go fully on chain. They want to basically add the blockchain as a feature. And so we're working with them on that. One big component of it is compliance. So with CRE, the first product that we built on top of this runtime is called ACE. So ACE is a solution that compiles 3 products: cross-chain identity, a policy manager, and reporting. But it enables asset issuers to bring the policies that they need to adhere to in whatever jurisdiction they're in to the smart contract layer. And so, yeah, very excited to be here.
Cool. Thank you, Ash. Tomer, you want to go next?
Hey, Tomer from Stellar. First of all, super excited to be here, especially on stage with our dear partners. We've had USDC on Stellar, one of the first networks, and we just announced an integration with Chainlink. Very excited about that one. And OpenZeppelin has been creating some really great standards in the Stellar ecosystem. I've been with Stellar since 2017, so it's been a minute, and I see a lot of familiar faces from the past 8 years, and Argentina is a huge hub for Stellar and crypto, so this is awesome. If you've never heard of it, Stellar is an L1 blockchain, been around since 2014, really focused on equitable access, started from kind of like payments and has evolved to everyday financial services. We were built for stablecoins before they were called stablecoins. We used to call them reserve-backed assets in the day. We had RWAs before they were called RWAs. Franklin Templeton issued Benji on Stellar before the term was even coined. And so, we're really excited for this moment, because I do feel like this has, if you look at the regulatory environment, it's kind of like the ecosystem readiness, the tech stack, everything is really ready for mass adoption and institutions specifically, and happy to get into the details.
Cool. Well, thank you everyone for the introduction. So now let's jump in right away into the first question of this panel. We want to really explore what changed this year compared to the previous years. I think it's pretty obvious that really something shifted, right? But like, from being on the ground talking to institution, what, in your opinion, or what you've seen, has really shifted in this year compared to the previous one? And what was the different conversations you had, like, especially in terms of like concerns from this institution, but also the mindset maybe also that they had in the competition? Yeah, maybe Anthony, you want to start?
Sure. I think the nature of the friction really has shifted significantly. We had regulatory unclarity for a long time. This year, now it's pretty clear in the West, I would say, in the US and in Europe. And now the conversation has moved from in technical teams of like, can we legally do this? And now, like, how do we do it? And, I sit with developers, from all types of companies. And, there's a lot of challenges around, like, especially from a CTO perspective, like, now the pressure is on to build these things. Like, how do I implement blockchain into my stack? I have a legacy backend there's Java. Like, how do where do I get started here? Like, in our industry, we use a lot of terminologies and things. They have no idea about gas and EIPs and wallets and things like that, gas abstraction. We really got to start meeting developers where they're at. Majority of developers in the world are Web 2 developers. We are a very small group of folks that are very, very specialized in Web 3 native. But yeah, I think the biggest shift is like that conversation is like, how do they start to implement this technology into their legacy stacks. And at Circle, we're building a full stack of products that help with that. We have our Circle Developer Services that our wallet infrastructure, our contract platform. These are APIs, compliant APIs that allow institutions to implement these features with the API, things that they're familiar with, right? And then we have Arc, which is directly addressing a lot of the issues of adoption that we've heard from institutions when it comes to things like, gas, right? They're asking, okay, do I need to hold ETH? Do I hold ETH on my balance sheet? They're asking about privacy. They're asking about, finality. We're addressing these things directly with Arc, and we're setting up Arc to be the economic OS for the internet. But yeah, I'll pass it on to you guys.
Okay. So I think like from our perspective, like our vantage point is that we work directly with the protocols. We work with DeFi and we work with TradFi. And so I think one of the biggest shifts that happened was actually on the DeFi side. Because like if you look at the ethos, like back in the day in crypto, like everything was like, oh, we're here to like kill the banks. We're not going to work with TradFi. We're going to replace TradFi and all of this. But then the shift has come where the DeFi protocols today have started to realize, and the ecosystems and the communities, that there's way more value in that world, and bringing like, I don't know, $1 trillion to their protocol is a game changer. And so now the conversations we're having with the DeFi side, and is really coming out of the protocols, is how can we be a home for these assets? And so this is a big shift, because previously it's like, a few folks going out to TradFi and being like, hey guys, tokenize your assets. But now you have asset issuers that want to come into DeFi because you're just going to earn more yield. And then you have the destinations that have also changed their view on being able to house these assets. So then it comes down to, as you said, like how do you make a developer experience that is easy to use? So with the Chainlink runtime, this came out of years of conversations with TradFi and DeFi. And this solution basically allows developers to write now the SDKs in Go and TypeScript. Then you'll have others in the future. It just launched 2 weeks ago, but allows you to connect existing systems and read and write to any chain. So this is programmable in a programming language that most of the world uses. And so, yeah, I completely agree that like the UX has also changed and will continue to get better.
And just quickly focus more a bit on like the institutional sales process or procurement process as well. Have you seen also a difference there, like talking to them? Because I think building products, usually the devs are the first kind of champions you would have in this world, right? But the moment then you have to go talk to the senior VPs, then it's another conversation. And I think this is also where we've seen a big shift. I'm curious also to have your view.
Yeah. So one thing that has changed is like, instead of just having a single person that is like the blockchain person of this massive company and it's like a one-man team, now you actually have folks that have 5 people. It's still not the most resourced team in the company, but they have an engineer, they have a product manager, and so we start to see more investments from these companies into the teams that are accelerating.
Yeah, I just want to echo that. I think that historically, if you've been around the industry for a while, then you know that, we've been talking to traditional financial institutions forever, but usually it was kind of like the innovation department. It was kind of like the people who are, prototyping these things and kind of like, fucking around, not really delivering. And I think that right now we actually are seeing like key stakeholders and decision makers are in the room and they're bringing a lot of resources, like Ash said.
I think it's a very valid point, but I personally seen also 2 types of customers, I would say, if we had to bucket it that way. The ones that are a bit more advanced, like you take the JP Morgan of the world, like they're a bit more advanced than others that are more at the educational stage. How do you usually tackle these 2 types of organizations, I would say?
I think you're giving JP Morgan way too much credit.
Yeah, you think so?
Yeah, look, I think that the traditional financial institutions are still wrapping their heads around this. And while even the ones that have had folks working on crypto for a while, there hasn't been like enough communication internally to actually understand how this plays out. And I think that going to production is a very different story from like the prototyping phase. And like the type of concerns that we're seeing now are a bit kind of like deeper. We're talking a lot about privacy. Everyone's talking about privacy in Dev Connect, which is great because this is kind of like the next glass ceiling of adoption. I think that in crypto historically, we've looked at privacy through like this, cypherpunk prism in which kind of like privacy is an all or nothing. But the reality is that privacy means different things for different institutions. It's challenging because sometimes you talk to these institutions, you ask them what is privacy for them, and they kind of like go silent, and it's not very clear. There's privacy, and so trying to figure this out and building this out in a configurable opt-in way is something that we're doing at Stellar right now, and I think is going to become much more important next year. I think security and reliability are things that keep coming up. I think a balancer hack was a terrible setback for institutional DeFi adoption, and so. At Stellar, we've built this audit bank a couple of years ago. A lot of foundations have been replicating this. We've seen a lot of success with basically have like dedicated resources for our ecosystem to ensure that things are like having like recurring audits. I think one interesting thing that happened post the balancer hack is the Bera chain halted the network. I think that was really interesting from like a governance perspective. And I think they did the right thing by halting the network, but it did raise a lot of questions as like how these decisions are actually getting made. Who are these validators that are making these decisions? If you're building on a network and there is a governance body that is able to shut down the network, you better know these players and what rule book they work with. And these are things that financial institutions care about, and we need more of that.
Yeah. Cool. Also, maybe moving to the next pieces, you were already touching on that, the missing pieces or the next topics that maybe we need to uncover. You mentioned just privacy now. What are the missing pieces in our ecosystem from a regulatory standpoint, technology standpoint, and standards from your perspective? And how is our industry addressing these gaps in your project, each one particularly, I would say? You want to take that one?
Sure. So obviously, keep going on privacy. I think that building like a set of different privacy solutions that have different guarantees, whether it's privacy, confidentiality, what levels of anonymity you have, what level of controls you have from auditors is super important. We're working both with you guys at OpenZeppelin on this, with friends from Nethermind on this. We also have internal projects, and I think that these are the things that will actually bring us to production. I think that we keep talking about compliance in the privacy space in blockchain. It's impossible to actually talk about compliance because we don't know what compliance is like, right? So we need to kind of like think from the ground up, build the foundations of privacy and work with the regulators on ensuring that it makes sense. One thing that I think is really missing from a regulatory perspective is like a framework for dealing with identity, verified credentials. I think the tech is super advanced in terms of verified credentials. The regulatory environment is not, which causes, like the KYC hoarding that results from like the Bank Secrecy Act. And we really need to move away from that as an industry. As long as we don't move away, we'll have this like requirement to have like centralized auditors, permission auditors. It's not the end of the world, but we'd like to see this improve.
And how do you think, as an industry, like different players, we could coordinate to support that effort? Because I think one of the biggest problems usually with regulators is you sometimes need like a neutral party to coordinate different entities that have different interests, and that it's super hard to coordinate these efforts. So what's your view on that?
I think that cross-chain collaboration and working with different stakeholders is super important. We're part of the Confidential Token Association that you guys are also part of, and we love that. And there's a whole compliance effort in that space, and so we really need to, to step out of, our the hat that we're wearing of whatever it is that we're specifically building, and think about this as an industry. And we really need to think about this, like I said, foundational level from the ground up. Build solutions that we were able to show the regulator and explain why this is better and why this is actually superior to the current system. And if you look at the the KYC incidents with we had a big incident with Coinbase this year, but like these keep happening, and they're the result of kind of like sloppy regulation.
Ash, maybe you want to put on this?
Yeah. So I think the thing about regulation is if everyone just waits for regulation to come, then like everything just gets halted, right? You just end up in a very like slow environment. And one thing I've noticed about the space, and prior to Chainlink, I was actually part of like I'd say accounting compliance audit company. And back then, like 5 years ago, no one really knew how to do like accounting compliance and audit for crypto companies. But like we worked with the teams at that time and the auditors and the regulators to basically do it at the same time, right? So I think like collaboration, as you mentioned, includes all of the stakeholders here and the regulator, and we move at the same speed. And sometimes they need a bit more time, but like what we can give them is what is the compliance standards today. And so to really push more institutions to come into the space, we need to give them an environment that they can take existing compliance policies that they have today that has already been signed off on and bring that on chain. And so if you look at what that essentially looks like on a collaborative standpoint, you have the destination, like Stellar is a home for RWAs. Now, a protocol on Stellar, let's say you have the asset is tokenized, you can add ACE, which is the compliance tool that I mentioned, to bring the policies of the asset issuer to Stellar on the token level. Now, you have this asset that was earning a yield off chain, but now it's on chain. So you have more than just like the risk-free rates. You have like DeFi yields. It becomes like pristine collateral. But on the other side of that, we need to know like when the asset is deposited into a lending pool, they need to have ensured that the other side of that pool, the USDC, the stablecoin, has originated from like a certain place. Maybe it was just minted and then deposited into that pool, for example. So there's every stakeholder here, and all of this requires smart contract audits. So every stakeholder here needs to work together anyway to move DeFi, which is honestly like people look at our industry as like 3 trillion. DeFi is currently 150 billion, maybe 200 billion, right? So in 5 years, that is still a big accomplishment. But for us to go to 10 trillion and further than that, like we need to bring compliance to the smart contract there.
Yeah, I think the regulatory landscape around the rest of the world, I think, needs to be cleared as well. Like, institutions, they transact all around the world, right? And, our customers, how do you navigate that? I think that's still a big problem that we need to solve and get clarity on. But I think there's 2 other big areas that we need to clear up, and I'll kind of reiterate this again, is education. I know 2 founders that I just spoke to. They spent 2 years educating Kenyan Parliament about crypto, and finally they passed legislation to allow banks to participate in this, right? Education is big, right? I think developer experience as well. Circle, we're doing a lot of work in that area, creating a full stack to allow institutions to adopt this technology. We also put a lot of content out as well. I mean, we meet developers where they're at. For instance, our head of DevRel here, he's put out a piece of content that was it's called Stablecoin 101, and it's been getting really good traction and viewership. And we're just trying to meet developers where they're at, institutions where they're at, and educate about this technology. So
I'd be curious to know, like, if you have concrete example of workshop or educational ones that you've done that really made the change. I think it's definitely something that we're doing at OpenZeppelin that is key, educating people on like smart contract security 101, how you build things the right way. And sometimes when they're really not ready to do any product, this is really the stage where we could help on the leadership level, but also at the engineering level. Curious maybe if you have some examples there on successful ones you had, or...
Yeah, we throw quite a bit of hackathons, right? We've done a few in the agent to commerce space. They were very successful. We just had a DeFi one in London, which is great. We're looking into potentially doing some like enterprise hackathons that are internal. When I was at Microsoft, I did a lot of this, and it was very, very successful. We go inside of institutions and focus on a specific piece of technology and do an internal hackathon with the developer teams. And first educate them, do workshops, and then have to do specific challenges around building around the technology. So that's something that we're looking at Circle as well. So
Yeah, Tomer, you want to...
Yeah, I unfortunately this might be the general take here, but I don't agree with Anthony. I think that as an engineer, I love a good developer experience and putting resources out there and getting engineers excited. These institutions that we're talking about, engineers are not the decision makers. And so at the end of the day, the decision makers are, like the business developer executives, they give directives down and the engineers face the consequences. And, if they need to chew glass, they will chew glass. And I've seen this happen with other networks because Stellar is obviously an amazing network for developer experience. But, we talk to engineers from across the ecosystem. And, we talk to decision makers. They tell us, hey, we chose this network. This has nothing to do with the developer experience. We know that the developer experience is shit on that network. If you're an engineer in this room, you might know what network I'm talking about. And so a lot of decisions just get made from kind of like a go-to-market perspective more than, hey, this is a great engineering thing. Now, getting brownie points with engineers is amazing, and I'm all for it. And we put a lot of resources onto developer experience and engineering. But at the end of the day, I don't think this is what tips the scale for decision makers.
And then how did you tackle this issue then? Educate more the leaders? Like, what's your strategy and view there?
Yeah, I think the important thing is to have the engineers with you in the room and to make sure that really adjust to whatever stakeholders that you're talking to, and really be focused on the fundamentals and what value are you bringing to this organization? Because at the end of the day, we have a bad product market fit history in crypto, which is we don't think about product market fit historically in crypto, and we probably should. Like, at the end of the day, you need to provide kind of like a 10x value for this organization, whether it's on whether it's an operational efficiency, whether it's kind of like an unlock in terms of user experience, and kind of like regions that you're available at, and so we really need to focus on value, like classic product thinking.
Yeah, cool. Anything you want to add, Ash, or So I think we can move to the next one, which is basically more around the convergence to what we call the internet, right? Like, we're seeing different types of like DeFi protocols now trying to converge to TradFi. We're seeing TradFi converging, etc. And you have this middle ground, which are fintechs, right? Like, you take a Stripe or a Revolut as well, who are now trying to also play at the two fronts at the same time, right? But the idea here is to see, based on the current market conditions, I'll be curious to have your view on when do you think the real adoption of institution will happen? Is it more talking in 2 years' time, 5, 10? And what are potentially the blockers or the enablers that we'll see to make it happen in the next decade? Anthony, if you want to start.
Let's see. I think that I like to look at the future right now. Like, I'm really big on the future, and so I'll make a controversial statement about what I think the future is going to be. Right. I think we're moving into a place where AI will potentially start to make decisions on chain for institutions. I work a lot on agentic commerce, X402, the protocols that are making waves right now, and I love the future of this technology, and that I think that's coming within the next 5 years. I'm seeing a lot of developers, especially SF in New York, building on top of this technology. So, yeah.
Is there a specific use case that you're mostly excited about?
Specific use case, machine to machine transactions. We've seen a lot of things in our hackathons and our developers that I'm super excited about. But I think there's still a ways to go. But I think within the 5 years, we're going to see a lot of innovation in the area. So that's my prediction.
Cool, thank you.
So I think like the topic of like when will institutions like all of this come? I think they're here, right? Like they're here, and now it's about like how much of this off-chain value systems can we actually reformat into a digital format. And when that happens, and it is happening, and we're in the process of doing it, and everyone here is working on that, inevitably what is going to happen is these institutions in a way might get abstracted away into the blockchains, right? Their value will be there, and today we already see it with agents, that they are able to operate autonomously on chain, And what does this mean, right? So basically what this means is a whole new UX for the end user that may never actually know what is happening in the background. But basically what you have are like autonomous economies that are leveraging different types of assets. And these different types of assets have different purposes, usefulness, different yields. And outside of just DeFi, I think our existing Web2 world as well is going to reformat in a way their backends to have lower fees. This is why Stripe is building Tempo, right? Like the cost of like micropayments off chain doesn't work because of fees, right? So then when you have a chain, you're able to abstract that away, and then you can have like agents that are basically, and this is same for institutions, right? You will have agents that are able to operate continuously, autonomously, and for a consumption-based model instead of like a pay monthly or an annual model. So yeah, totally aligned on the agent side.
Yeah, I think, definitely, the operational cost reduction is an interesting aspect of it. And we've seen Franklin Templeton report kind of like 3 orders of magnitude reduction in costs moving from like their traditional system to Stellar, which is phenomenal. I think the operational efficiency side, I think, is kind of boring, to be honest, and not like completely aligned with like what I joined with why I joined this like industry. And I think that what I really care about is like the idea of like democratizing financial access. And so, and what we're seeing with Stellar is we're seeing that you have these like regional wallets or crypto applications that are delivering, financial services, kind of like, the regular boring financial services, which is great, like a high yield savings account, like kind of like investment capabilities, to regions that don't have that right now for a variety of reasons, right? So just like making that accessible for everyone, I think that's like that's a huge thing, and that's what excites me the most.
Cool. So maybe to wrap this up, I'd love to like maybe ask one last thing. Maybe complete this sentence: institutional adoption will succeed when, and I'd love to have your last view on it.
When the word blockchain gets removed from product descriptions, that's what I think. That's when I think it'll reach mass adoption. I think when the technology fades to black, I still believe in developer experience. I think, once a institution developer can implement, a credit feature in the app without having to say blockchain or gas or wallets or anything, I think that's when we've pretty much reached like mass adoption.
I don't know when, but I think like it's started. Yeah.
I think it will happen when interoperability is prioritized. I think like interoperability is kind of like the big value proposition of blockchain technology. And some of the moves we've seen from institutions are kind of like just taking their balance sheet and moving it on chain in like completely closed manner, without the ability to interoperate with like non-custodial wallets, without the ability to interoperate with DeFi. And that's really not what we're here for. Interoperability is the name of the game, and if you as an institution know how to take advantage of that, then the use cases will explode.
Maybe like quick question on this, because I think it's super interesting. The interoperability, we see a lot of internally in the industry, we think interop in our industry, but for an institution it's also interoperability with their current systems. Is this also something you're talking about and covering here in your comment? I think it's a big problem for the industry.
So this is something that we're working on, and it's not just like their existing systems. Is like a lot of these guys just want to have their own permission blockchain, and then they want to, like, when they want access permissionless markets. It makes sense. That's what they want to do. That's what they want to do. But they also need to be able to connect that permission blockchain to the existing systems. And so having one standard for interoperability, we call it CCIP, and CCIP runs and will power CRE as well. So yeah,
we're working on that problem as well. We have a couple of products called CCTP and Gateway. Gateway is one of the newer products that unifies liquidity across chains into one unified USDC balance. Really cool product. We're also kind of working on something with Xworld too to allow AI agents to use USDC across multiple chains as well to unify balances. Institutions don't want to have like wallets all over the place, right? So we want one unified balance, being able to spend USDC across chains, extracting all that away.
What about off-chain?
But about off-chain? Good question. No
Ye-
comment.
Yeah, I'll just add to that. You know, it's something that we've focused on since the early days of Stellar is like interoperability with the traditional financial institutions. And so from the get-go, we set up a set of standards for on and off ramping between financial services. We call this the anchor network. The biggest anchor on our network is MoneyGram, that is interoperable with pretty much any wallet that implements these standards. So you can go in with your Stellar USDC into any MoneyGram agent around the world and cash that out in like local currency. And so, yeah, we're big on interop with every type of system, and, we're there.
Cool. Well, thank you so much for joining us today.
Thank you.
Lahrichi conference, and thank you everyone to